A great banking clampdown is coming. Regulators have been spooked by what happened last year. Bank runs in the middle of bank failures. The FDIC having to step in and take banks into receivership, and then ultimately announce that they were out of money and demanding more money from the large banks. Because in their own words, the Federal Reserve said the regional and small banks simply cannot pay the added costs for insuring depositors. We are in the midst of one of the greatest banking crises we've seen in the last 100 years since the Great Depression. We are in very serious times. The run-up to what we have seen has been because of out-of-control spending on the government's part, hiding the truth about the economy. There's a story I have out of the New York Times. I want to go over it and talk about it. And then as I'm talking about it, I would like you to think about what you're doing or what you could do to prepare now. I've said this before and I'll say it again. There's never been a better time to start a business than during a crash. And we have crash signs all around us. The story out of the New York Times says bank runs spooked regulators. Now a clampdown is coming. Said Federal Reserve officials and other bank regulators could roll out a new proposal this spring to ward off a repeat of 2023's banking turmoil. Remember, we are in the middle of another bank, large regional bank, failing right now, New York Community Bank. There are other bank stocks that are going down as well. The bank stock index is failing, it's hurting, and that is going to bring more and more information to light, especially as Q1 of 2024 results come out. It says 1 year after a series of bank runs threatened the financial system, government officials are preparing to unveil a regulatory response aimed at preventing future meltdowns. After months of floating fixes at conferences and in quiet conversations with bank executives, the Federal Reserve and other regulators could unveil new rules this spring. At least some policymakers hope to release their proposal before a regulation-focused conference in June. According to a person familiar with the plans, the interagency clampdown could come on top of another set of proposed and potentially costly regulations that have caused tension between big banks and other regulators. Taken together, the proposed rules could further rankle the industry. The goal of the new policies would be to prevent the kind of crushing problems and bank runs that toppled Silicon Valley Bank and a series of other regional lenders last spring. The expected tweaks focus on liquidity or a bank's ability to act quickly in tumult, in a direct response to issues that became obvious during the 2023 crisis. The banking industry has been unusually outspoken in criticizing the already proposed rules known as Basel III Endgame. I want people to understand this. Think about this. Basel III Endgame. They even tell you right now, this is the end game. There is going to be a massive consolidation of banks throughout the country and throughout the world. They are planning a collapse. Part of Basel III is to let banks hold gold as a tier 1 asset. This is a massive, massive change that happened about 2 years ago. And that's why central banks around the world are buying gold. The question is, what are you doing? The American version of the international accord that would ultimately force large banks to hold more cash assets called capital. Bank lobbies have funded a major ad campaign arguing that it would hurt families, home buyers, and small businesses by hitting lending. Let me explain what they are saying. They are saying that they cannot simply hold 3% of your deposits back as an emergency fund to keep them open just in case, because by doing so, they are not going to put out as many loans. You have to understand that the capital is now being pulled back. It's not just higher interest rates, it's higher points, more fees, stricter lending rules that are also going to be hurting the American public. That's going to be hurting the economy. Last week, Jamie Dimon, the chief executive officer of JP Morgan Chase, the country's largest bank, vetted to clients, or vented, sorry, to clients at a private gathering in Miami Beach that, according to a recording heard by the New York Times, nothing regulators had done since last year had addressed the problems that led to the 2023 mid-sized bank failures. Mr. Diamond had complained that the Basel capital proposal was taking aim at larger institutions that were not central to last spring's meltdown. The tumult last year came as regional bank depositors, spooked by losses on banks' balance sheets, began to worry that the institutions might collapse and rapidly pulled out their deposits. The runs tied to back problems with bank liquidity, a firm's ability to get access to money quickly in a panic. Look, I believe that honestly, there will be rules set up in the future where you will not be able to pull as much money as you can today. And quite honestly, if you have tried to go out and pull $10,000 out of your bank account, for those watching that actually have $10,000 in their bank account, it is very hard. You're actually treated like a criminal. Let people know down at the bottom in the comment section what I'm talking about, because there are a lot of people that do not have that much money in the bank account. As a matter of fact, the national savings rate keeps dropping and dropping and dropping, and the average American has around $400 in their savings account. Not even enough to deal with any kind of repair needed on their vehicle, let alone an emergency account, right? The banking industry is getting its grips tighter and tighter on the American people. And it's very important to note that this banking crisis is happening right now, and it's going to get worse later in 2024. So what would you rather do? Would you rather be sitting with a little bit of debt or no debt at all? Some money in the bank, I know what I'm talking about, spread out over multiple banks, but also have a clear mind and your credit score really solid right now to get ready, because as this crisis gets worse, more American families are going to be hurt to the point where they cannot participate in a real estate downturn. They will not be able to participate in a stock market crash. They will not be able to participate in all of the deals out there when you go through a heavy recession or a depression. The clampdown is coming. Regulators know what they screwed up last time, and they're gonna fix it. But the problem is, it's going to be to the demise, ultimately lead to the demise of the American consumer. And this is why it's important to stay on top of the news that's going on, because as things develop, you can pivot and make decisions fast. I hope you got something out of this. Thank you to everybody that's hitting the resubscribe button if they've been unsubscribed, and everyone that hit the bell icon, thank you so much, because I do videos that do not get shared on a specific reason because of how I do them, set up either live or with video, and you can't just go to the channel and look it up and find them. So thank you to everybody that hits the bell icon. I hope you have a great day. I hope you're getting ready, because we're going to take advantage of this. You and I, we're going to do this together. The Economic Ninja is out.